Every war creates chaos. Cities burn. Supply chains crumble. Stock markets tremble. Lives are upended. But behind the smoke and destruction,
A lot of money.
moves. Some industries collapse. Others explode with profit. And the war between Russia and Ukraine might be the clearest example of that. While soldiers fight on the ground, economies, corporations, and currencies are waging their own silent battles. Banks freeze assets. Oil pipelines redirect flows. Defense contracts multiply. The question is, who's actually winning? And what's the real economic benefit of this war? Imagine a world where every missile fired, every blockade enforced, and every sanction applied ripples far beyond the battlefield, touching every consumer, investor, and nation. That's the economic reality of modern war. And this one, in particular, is rewriting the rules. When Russia invaded Ukraine in February 2022, the world changed overnight. Markets panicked, gas prices spiked, supply chains froze. The West responded with a series of sanctions, cutting off Russian banks from global finance, freezing assets, and limiting oil and gas exports. The goal was to punish Russia, yet, paradoxically, those measures sent shockwaves through the global economy. Europe, heavily dependent on Russian energy, suddenly faced a crisis. Countries scrambled to replace Russian gas with supplies from the US, Norway, and the Middle East. LNG terminals worked overtime. Contracts that once seemed impossible were signed in days. Meanwhile, global investors faced uncertainty like never before. Stock markets plunged, currencies fluctuated wildly, and gold, the traditional safe haven, surged. And yet, amid this chaos, a clear pattern began to emerge. Crisis for some meant opportunity for others. Supply chains adjusted, companies adapted, and nations recalibrated. Every disruption became a test of resilience. Energy, oil, gas and coal became the heart of this conflict's economic story. When Russian oil and gas were hit with sanctions, prices surged to unprecedented levels. Europe's energy shortage meant desperate demand, and global exporters were ready. Oil giants like ExxonMobil, Shell, and Chevron posted record profits. ExxonMobil alone earned over $55 billion in 2022, surpassing even its previous historical highs. Shell saw similar gains, citing the unprecedented market conditions caused by the conflict. But it wasn't just corporations. Countries became economic players themselves. The US emerged as Europe's largest supplier of liquefied natural gas, reshaping global energy alliances. Norway, Qatar and other exporters enjoyed windfalls too. Yet, not all benefited. European households were hit with skyrocketing energy bills. In Germany, average gas prices doubled. In Italy, electricity costs soared. The same crisis that made oil executives wealthy crushed ordinary consumers. Even within Russia, sanctions reshaped markets. The ruble initially plunged, yet high oil and gas prices offset some losses. Russia continued selling energy to willing buyers, particularly in Asia, showing how geopolitics can bend economic outcomes in unexpected ways. And for the West, the energy scramble was a lesson in resilience and risk. Diversify supply, protect infrastructure, and recognize that energy security is now inseparable from economic security. Next, the defense industry. In war, weapons are currency. After February 2022, global defense spending surged to levels not seen since the Cold War. NATO countries rushed to replenish arsenals. Lockheed Martin, Raytheon, BAE Systems, and others saw stocks soar. Every new missile order or tank delivery translated directly into billions in revenue. Even nations historically restrained in military investment, Germany, Japan, South Korea, began boosting budgets. Germany approved a €100 billion special fund for defense. Japan reinterpreted its constitution to expand its military capabilities. For defense contractors, this wasn't just business, it was a global boom. Contracts multiplied, lobbying intensified, political influence grew. Companies that supplied weapons became indispensable players in shaping national security policy. But the irony is stark. While these corporations profit, the risk of prolonged conflict increases. The more weapons sold, the longer war can continue, and the cycle of profit and destruction feeds itself. War has always been a catalyst for technological innovation, from radar to drones, and for industry. It is a unique form of opportunity, but in this modern era, the financial stakes are as high as the battlefield stakes. Now consider food. Ukraine was a breadbasket of the world, exporting wheat, corn, and sunflower oil on a massive scale. The war disrupted harvests and logistics, sending prices soaring. Countries in Africa and the Middle East heavily reliant on Ukrainian grain faced shortages, food riots and political instability followed. But for alternative suppliers, the US, Canada, Brazil, opportunity emerged. They filled the gaps, exporting grain at record prices. Even shipping and logistics companies benefited. Rerouted trade lanes, port congestion, and insurance risks increased costs and margins. Companies capable of navigating the new realities found windfalls. Yet, this was not a simple win. Food insecurity became acute for millions. While profits climbed on balance sheets, real human suffering escalated. Commodities like metals and fertilizers also followed similar patterns. Russia and Ukraine are major producers of neon, titanium, and ammonia. Supply chain disruptions sent prices soaring, benefiting competitors in Canada, Australia, and the US. The war demonstrated that in the global economy, scarcity creates leverage, and those able to adapt often profit at the expense of those caught unprepared. Beneath oil, wheat, and weapons lies another battlefield: finance. Sanctions froze billions in Russian reserves. The US dollar solidified its dominance. Investors fled risky regions, pouring money into safe Western assets. Sovereign bonds, gold, and US Treasury notes became the new refuge. For the United States, the war reinforced its economic power. Western defense and energy sectors grew despite inflation. Corporations reported record earnings. Wall Street thrived. Meanwhile, emerging economies like China and India exploited discounted Russian oil. Bargains purchased during the conflict enhanced their energy security while increasing their geopolitical leverage. Even currency dynamics shifted. Bitcoin and other cryptocurrencies saw increased attention in Russia and Ukraine as traditional banking systems became unreliable. Alternative financial instruments flourished under pressure. The war wasn't just a military conflict, it was an economic realignment. Supply chains rerouted, energy corridors shifted, trade alliances were rewritten, and while some nations scrambled to maintain stability, others leveraged the chaos for strategic and financial advantage. Of course, behind every profit chart and market gain are human lives. Millions of Ukrainians lost homes, families, and futures. Cities were destroyed, communities displaced. Refugee crises stretched across Europe. Even in countries benefiting economically, ordinary citizens faced higher costs, inflation, and uncertainty. Energy bills skyrocketed, food prices rose, and global inflation hit record highs. The profits may look impressive on paper, but the human cost, staggering. War is never free, and often the burden falls on the most vulnerable. Yet, in modern conflicts, the human dimension often fades behind statistics and headlines. Economies adjust, markets shift, and corporations prosper, while the tragedy on the ground continues unseen by most. So, what is the real economic benefit of the Ukraine-Russia conflict? For oil giants, defense contractors, and strategic powers, opportunity. For ordinary people, instability. For nations, both risk and leverage. Wars have always reshaped economies, but this one reminded the world that money often flows toward conflict, not away from it. Power hides behind aid, profit hides behind principles, and the balance sheets tell a story the headlines rarely do. In the end, every war is fought twice, once on the battlefield, and once in the balance sheets. And sometimes, the second one is even more brutal. Subscribe for more deep dives.